Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at the Bitcoin HODL Waves. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now I'm just on the HODL Waves chart on the Look Into Bitcoin site, and if you weren't already aware, what the HODL Waves is doing is looking at all the current Bitcoin addresses. And as Bitcoin is built on what's called a blockchain, we can actually publicly see every single wallet, every single address that has ever used Bitcoin. And what we can do is once we have all of that information is group the addresses into bands based on how long they have been holding the BTC. So this is why it's called the HODL Waves, and we can actually go down onto this chart and Look Into Bitcoin and isolate by each band to see each separate band and what percentage of the current network they're actually making up. So for example here, I've just removed all of them apart from the 1 day to 1 week and the 24-hour addresses. So here we can see at any given point the percentage that the 1 day and 1 week wallets are making up of the current network and even the 24-hour. And this is ever changing depending on the current market conditions and the current general sentiment in cryptocurrency markets. And the HODL Waves is a great chart, and I definitely recommend checking it out. But we do have a newer chart and a newer variation of the HODL Waves that I think is considerably more effective. And this is the realized cap HODL Waves. Now, if you weren't aware what the realized cap was, it is looking at the last transacted value of each Bitcoin on the network and then collating that all to get a realized cap. So a market cap is just looking at the current price multiplied by the circulating supply, but the realized cap actually takes into account what price people are actually using and sending Bitcoin on the network. So it's a very useful metric, and we have a chart specifically for the realized price here on lookintobitcoin.com. Or if you want to know a little bit more about its calculation, we have just under the chart here a little bit more maths and formula going into how we're actually calculating this. But the realized cap HODL Waves is similar to the HODL Waves in that it's looking at the amount of wallets on the network holding amount of Bitcoin judged by the amount of time they've been holding that Bitcoin. But this is then taking into account the average price of accumulation for each of these bands. So we can see here, if we just compare them, the HODL Waves and the realized cap HODL Waves, if I just isolate that again to the 1 day to 1 week and the 24-hour bands, we can actually see there's a fairly substantial difference in how these waves are actually being portrayed. So we can see at any given point here on the HODL Waves chart that these are increasing generally just following price. They're fairly parallel. There's generally more retail interest as price is vastly increasing, so there's generally a larger increase of new wallets. But we can also see, if we look at the realized cap, that once these new wallets are actually being utilized on the network, they're on average accumulating Bitcoin at considerably higher prices because they're having a much greater impact on the realized cap for Bitcoin. So this is a very interesting metric to look on its own, because we can see when the realized cap HODL Waves are these very short-term holders of Bitcoin increases exponentially, they're contributing massively to the current realized value of Bitcoin. And we have these huge spikes to the upside of anything from the 1 month and below wallets. This is usually an indication that the market is becoming a little bit overheated because lots of people are entering the cryptocurrency space and seemingly have no regard for the current price they're accumulating at. They just want some exposure to Bitcoin and cryptocurrencies, and in doing so, they're usually buying at prices that are significantly higher than what could be considered the fair value. One interesting thing to note when looking at the realized cap HODL Waves is as Bitcoin grows and matures as an asset class, it's becoming a little less speculative and there's less instant retail impact on price as we actually get to these overextended, overbought levels. We can actually connect the peaks of these 1 month and below HODL Waves and see there's a general downtrend here where every time Bitcoin is peaking in price, the impact on the realized cap that these new wallets are having is getting less and less. And this is just generally as Bitcoin is around a much longer time, more people are investing for the long term, more people are just holding Bitcoin for long term, and there's also lots of Bitcoin that have just been lost or put into cold storage and forgot about that may never truly be transferred again, and this is always having some impact on the current realized cap. But for a good and fairly accurate indication of when may be a good time to start taking some profit on your Bitcoin positions, especially in the next bull cycle, whenever that might happen, definitely check out the realized cap HODL Waves and definitely check out these smaller timeframe holding addresses. Now, if we want a better indication on how we can actually try and predict when Bitcoin may be bottoming out in price, rather than looking at these short-term newer wallets on the blockchain, we can actually isolate to the slightly higher time frame one. So for example, if we look at the 1 to 2 year HODL Waves, for example, we can see when these increase exponentially, and then especially when they start to decrease, this is usually a really good indication that Bitcoin is actually bottoming out in price, because these people that are holding Bitcoin for a 1 to 2 year period usually maybe invested towards the tail end of a Bitcoin cycle and are actually just holding for the next cycle. So their impact on the realized cap very much increases as the general interest in cryptocurrencies decreases, as they'll be hoping on to a new cycle without instantly selling as soon as Bitcoin has a little bit of drawdown. They would rather hold on. They see it as an investment and are willing to wait for the Bitcoin conditions to improve. So we can see in every single one of Bitcoin's bear cycles, this realized cap HODL waves of the 1 to 2 year wallets increases exponentially, especially towards the tail end of the bear cycle. And definitely as this turns around and starts decreasing substantially, more people are coming in and getting interested into the scene, and generally more people are just investing, and these new wallets are having more of an impact on the realized cap. The 1 to 2 year realized cap HODL waves starts decreasing exponentially, and this really is a great indication that the Bitcoin market has bottomed and we may be entering a new bull cycle. So if I just isolate this chart of the previous 3 bear markets, we can see every single time this increases exponentially, rounds off, and as soon as this starts decreasing very fast, we can see the Bitcoin price almost every time starts to rise exponentially. So here in 2015, we could see as soon as this started topping off, Bitcoin was at around $250, $270 after it bottomed beneath $200. So it wasn't the exact bottom, but it really showed the shift in the trend of Bitcoin before we obviously peaked at around $20,000. And in the 2019 bear market, as soon as this started to top out and turn around, the Bitcoin price was around $7,000. So again, this wasn't catching the exact bottom at around $3,500, $4,000, but for more conservative strategy, it may be worthwhile waiting for this realized cap HODL wave to actually turn to the downside to signify that the trend has shifted in Bitcoin, and this may be a great opportunity to buy. Usually as this starts to turn around, it means we have potentially 2 more years of upside price action. So once this does start to turn around, it isn't necessarily that we need to go into a mad rush to accumulate as much as we can at that instant. Again, it's better to take things calm and be very strategic in your investment strategy. But again, worth keeping an eye on, and especially now as this is starting to round off a little bit, very much worth keeping an eye on things to make sure you don't miss out. So just to summarize, just like the market cycles of the Bitcoin price, trends in both the HODL and realized cap HODL waves, or the RHODL waves, can be very cyclical as well. And especially when looking at the RHODL waves and the cost basis within different bands, there are definitely trends we can observe to help time the market with a greater degree of accuracy. So for example, markets tend to have bottomed out when the 1 to 2 year bands start rapidly decreasing. And then usually when the 1 month and below wallets start to rapidly increase in their impact on the realized cap, this usually indicates that the market is becoming a little overheated. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know your thoughts on the HODL and RHODL waves. Is this a chart you use often? Thank you very much for watching, and I'll see you in the next one.